Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sidney, Ohio. This is another episode of the Mortgage Guide Podcast. This week we're going to get a market update and see what's going on in the economy, as well as discuss a little bit about what's been going around Facebook with buyer-broker agreements. A lot of people are warning their clientele and the general consumer out there about what it is, why it's there, what's happening with it. So first thing I want to talk about is the market in general. Right, so you hear a lot of people, or if you're working on the line and you're talking to your buddies, and they always talk about how they're waiting for those home prices to go down, they're waiting for the bubble to burst. Well, I've always talked about that with our current clientele, and the concerns I have with it bursting, because I personally don't believe that there is a bubble per se, as you would typically see in the market. Okay, unlike an 2008 bubble, right? So I've always talked about this, and it's always been a supply and demand issue, right? So if you have any kind of classes in economics on and understanding of supply and demand curves, this is kind of what we're in right now, right? The amount of supply has not outpaced or equal the actual demand in the market. Okay, so that's why these home prices kind of stayed a little high, because there's not enough houses out there to satisfy that demand. So I personally don't think that we're going to have any major price adjustments anytime soon. And so the reason I wanted to talk about this is because NAR had National Association of Realtors had 6 different economists come on and weigh in about this, and they all have kind of the same conclusion as I do, is that this is a natural supply and demand issue that we don't see that we're coming out of anytime soon. And one of the things they put in here, we're talking about median home prices, and median home prices in the country are at almost $420,000. And thank goodness we're in a market where it's not. It's closer to a 270 mark for us on average. And I'm here in Shelby County, Ohio. So even though our median sales price around our area are a little bit lower, let's go off of their numbers here. So the median price of a resale home right now is at an all-time high of right at $420. It's $419,300. That was as of May. Okay. If you take the average 30-year fixed rate mortgage of 6.87%, they don't talk about how much money down or anything like that. They're simply talking about the principal balance here. The mortgage payment, okay, just the principal and interest piece, is $2,750. $2,750. All right, that's quite a steep price. If we could see these rates actually dropping 1 point, it's going to save about $200 a month. I know it doesn't sound like a lot. It's a drop in the bucket on a $2,700 payment, but I think it would definitely help out a lot of consumers if we can get a 1 point price drop on this. But that's something I wanted to touch on. But let's see what these economists say. Home price declines appear unlikely. These are just the headlines, right? I'm not even going to go into it. Hard to see price growth changing too much. It's all about the inventory. Nothing to suggest a major home price drop. Prepare for prolonged period of, quote-unquote, I don't like to say this, unaffordable housing, and only a significant shock to the U.S. economy would affect home prices, per an economist for CoreLogic. So there's a lot of stuff going on. They all kind of have the same conclusion that we aren't going to see this major price drop unless something significantly impacts our economy. So although we don't see that major price drop, guys, coming anytime soon, it's not to rule out that we could see a minor decrease in home prices. But, it's that same supply and demand issue. We talk about the dream of these rates coming down, which they are still expected to come down next year. They're on a downward trend overall over the last 8-12 months. They touched almost 8% at one point. So right now they're in the upper 6s, low 7s. Just depends on program, down payment, credit score. There's a lot of things that go into it, right? So they're on a natural downward trend. But if we can get into those 5s, here's something to think about. So rates drop, okay, fantastic. Helps your payment, helps how much you can qualify for since we're in a high price environment. The challenge or the issue that you're going to run into if we get a big rate decrease is, let's say you have 1,000 home buyers in the market with 100 houses, all right? A 1% drop could increase the amount of home buyers from 1,000 to, 1,200, right? A 20% increase. That additional 20% increase in how many people are in the market with a very, very minimal increase in supply could create a bigger demand issue or a bigger problem with more people looking at the same home. Multiple offers, going over the ask again, no inspections, you name it. It can create a whole new slew of issues, right? So we were hoping for this price decrease, but if these rates drop, it could increase the demand, and these price points, instead of slowly trickling down or even staying the same, could tick up on us a little bit. That's one of the issues that I see with a major rate drop. That's why they're kind of slowly trending downward. As much as we'd love to see them just drop out the bottom, it's not going to happen. But if they did drop out of the bottom, I think it'll create more problems than we are currently facing. So that's my 2 cents on economy. That's my 2 cents on housing market and prices, demand, all that fun stuff. All right, guys. So next piece that I wanted to discuss is the buyer-broker agreements that you might see some real estate agents posting online, warning clients. It's not really a warning. It's kind of a heads up, right? That it's not a bad thing. It's just one of those things that you're going to have to deal with when you speak to an agent to go look at properties. So the purpose of this buyer-broker agreement is it kind of clarifies the relationship between the buyer and the agent and the broker, right? Kind of outlines the agent's duties, compensation, duration of the agreement, helps to kind of give some transparency on what that relationship is going to be, that working relationship between the buyer and the agent, as well as the brokerage, okay? There's multiple types of agreements between, you got exclusive, you've got non-exclusive, agency agreements, you got all this stuff. I am not a real estate agent. I am going to let your realtor explain that to you. That is not my area, okay? I'm not going to step on toes here. But what's going to be in there is the compensation piece, okay? As we've talked about before, NAR came out with the settlement talking about not requiring sellers to pay buyers, agents, all this fun stuff. I personally do believe that it depends on your market, of course. That in our market, a really good listing agent is going to have these conversations with these sellers and explain to them that it's in their best interest to ensure that the compensation that's built into that listing package is enough to help split or pay a buyer's agent, because having that compensation there, the buyer's agents are going to bring better buyers, qualified buyers, a lot of good things to the table for that seller, in my opinion. Could I be wrong? Sure, I could be wrong. That's my opinion. You can frame whatever opinion you want, but that's what I think. And having that compensation there, I think is going to be extremely important to ensure that the seller is getting the best offers, the best buyers into their homes and making offers. So this is why it's here, right? So we've got to discuss that. All programs are a little bit different. They're kind of loosening up a little bit. I'm not going to go too specific into it. But since this all came out with the NAR settlement, a lot of the agencies, USDA, VA specifically was the big one, right? VA specifically was a huge one here. So they want to, before the buyer couldn't pay their own agent, all right? It was just they had a weird rule about it, and it was a problem. And they've opened up to it and said that they can, in fact, do that. But let's get back to this agreement here. So these agreements are going to vary. Every brokerage is going to be different. Every agent might be different. They may have an open toolbox to offer whatever you want as a buyer, but in there is going to talk about how you can terminate it. It's going to talk about how long it's for. That's key, right? I've heard some people talk that they're going to do it on a per house basis. Some are going to do it for a month, 6 weeks, 6 months, you name it. I mean, it's all open, and every agency is going to be different, right? So it's just one of those things, guys, when you have to sit down with your agent and discuss that, read the form, check it out. They'll explain it to you. It's not scary. Okay, it's just an additional form you have to sign up front. Again, for some people, it might be worrisome. They think they're going to be stuck in some sort of agreement. Just check it out and have that conversations with your agent. But if you've seen some of those Facebook posts, that's why that NAR settlement is requiring that, or has made changes for all their licensed realtors in the industry to have that agreement signed up front with their buyers. So we will probably have Teresa on here sometime. We're going to discuss specific programs and how that can be worked in, how it can be paid, all that fun stuff. But I did want to update you on that because there is a lot of talk online about it. And I think someone's been posting about August 17th, I think is what it was, when those things are going to start getting signed, or July 17th. Can't recall. Again, not a realtor, not my area. So just wanted to bring it up just in case you guys are seeing that. I hope that information was helpful. Again, guys, if you have any questions, you give us a holler here at the office. Take a look at the bottom of the banner right there. All of our contact information is there. Subscribe on YouTube. Check us out on Apple Podcasts and Spotify. We will catch you all next week.